CIS Commodities, taking a look at the week in review, and let's start out by just seeing where we close for the week. March corn down 6 cents on the week at 375, a little over 375. In the January contract, beans took a hit this week, down a little over 35 cents at 870 3/4. Wheat a little bit stronger this week, up just a hair over 19 cents at 490 in the March contract. And December cattle continuing its grind lower, 282 lower on the week in the December contract at 121.45. And December hogs down $1 in the December contract at 56 bucks. It is set to expire on Monday. February hogs are actually up on the week, closed at 60.50, and that's up $1.45 on the week. Just taking a look at some of the other outside markets as well. Crude oil continues its plunge. It looks to close somewhere down $4.50 lower on the week. We're seeing lows we haven't seen since December of 08. And that market's a very sick market as well. The dollar looks to close a little bit lower, 65 points lower in the week, somewhere around that 97.51 area as well. And this is something that's weighing on our markets as well. We did see corn and beans close lower this week. The highs last week were made on Friday, also in correlation with the dollar dropping 2 full whole points down there, or $2 in the index. As we see that grind lower, it was disappointing to see that the commodities continued to grind lower as well. And I think the culprit there is crude oil. As long as crude oil continues to grind lower and ethanol continues to trade at a premium to RBOB or to gasoline, it's tough to get bullish this corn market here in the short term. A couple other things going on this week as well, as the new Argentina president was sworn in office this week. Macri was incorporated on Wednesday, the same day as our report, and with him in the office now, there is thoughts and ideas, and it's not new to the market, that we're going to see a cut in ag exports, whacking corn and soybeans out of Argentina, the export tax out there, that would allow them to push some sales onto the market. From a world perspective, Argentina is priced more competitively right now in corn than we are here in the U.S. But again, these measures aren't going to be overnight measures. It'll be interesting to see how these measures take place in days, if not weeks, to come. The other concern there is what will they do with their currency? Will they let it free float against the dollar or not, which may devalue and provide also a cheaper alternative for other countries to purchase their grains, soybeans. The main item of interest this week was the monthly USDA supply and demand report, one of the least anticipated reports of the year. Because they leave the production estimates alone, so the supply is left alone, and if any adjustments are made, it's made on the demand side of the balance sheet. And it was a very whole hummer one, to say the least. Soybeans, they left the balance sheet completely alone, left the 465 million carry out alone. That's what we were last month, and we were expecting small changes there. Nothing was changed. That's compared to 410 million bushel carry out last year at this time. So we did start to see last year's balance sheet start to grind lower on the increased exports last year, as we were testing the 500 at one point. That isn't coming into play to this point yet this year. On the corn balance sheet, again, we were just looking for some small adjustments, maybe a little bit more in corn. We were looking for an increase in ethanol demand. We did get that, 25 million bushels, but we unfortunately got a decrease in corn exports of 50 million. So we did increase our carry out about 25 million bushels up to 1.785 billion bushel carry out. That was up 25 million again over last year. The bulls were looking for a little bit more on the ethanol demand following last week's RFS announcements, and we are grinding at a pretty good clip to this point. Yet to be monitored. Export sales have been poor to this point, and I guess that's what the trade or what the balance sheet has reflected. So as we take a look at these markets, something to take a look in next week's trade. The question is, what fundamental catalysts out there are going to cause us to either rally or pull the rug out on this? And right now, we did get a commitment of traders report this week that showed that the managed money that is willing to go short or long this thing did reduce their short positions. This is through Tuesday of this week, but as of through Tuesday of this week, the managed money bought back 13,000 contracts in corn. They're down, they're short 65,000. They bought back 6,000 of wheat, short 71,000. Bought back 23,000 contracts of beans, and they brought that short clear back to only 11,000. It wasn't but a few weeks ago we were holding a very large, if not record short position in corn, soybeans, and wheat. We did buy those shorts back through Wednesday this week. We probably added some shorts to it Wednesday, Thursday, and today. From a fundamental perspective, all eyes are going to continue to be on exports. And where are we in the world market right now as we compare to Brazil and Argentina? And also, we're going to keep an eye on South American weather. There is still reports of some dryness, but there's in the northwestern part of Brazil, northwestern part of Mato Grosso area, to be specific, we are seeing a little bit of dryness, but the trade is not very concerned at this point. And there are rains scheduled to hit those areas next week. So something to keep an eye on over the weekend. Still feels like it's going to be a very sideways grinding trade here. Basis here locally in town in Cedar Rapids has widened this week. There was some cash movement. They were able to get some corn moving with a stronger basis posted a few weeks earlier. So keep an eye on basis, keep an eye on South American weather at this point, and we'll see if we can find a catalyst to cover these shorts out here at the managed money. Over in the livestock market, cattle continues its very choppy, volatile, downward trade. Cutouts on the week. The beef cutout was steady on the week. Cash traded weaker again this week. Still looking to clean up a lot of heavy cattle out in the country at this point, trying to get ahead of it. We're still seeing troubles with some heavy steers still coming into play. The $1 million question is, can the trade get ahead of it? We do have short kill weeks, then the last 2 weeks of the year. Will there be some buying next week? Trade right now, looking for a steady cash trade next week. When you walk over to the other side, to the hog side of the fence, the industry is doing a much better job there staying ahead of the supply at this point. We did see the largest kill week last week for hogs, but again, the industry seems to be keeping ahead of that. Cash and the pork cutout was steady for the most part this week. We did see a very strong close in the February today, taking out that $60 area. It was an area of resistance. Maybe that'll be an area of support moving forward. Going into next week, I think that's what we need to look at, see where cash continues to trade for cattle, and see if that $60 area in the Feb contract we can find some support on the charts. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.